Hello and welcome to the Stable Reports podcast. Stable Report is a news site dedicated to curating the best resources related to stablecoin projects. We celebrate the development of stablecoins and see them as a stepping stone to mainstream adoption of cryptocurrencies for daily use and transactions. If you'd like to get acquainted with what stablecoins are, visit our website or follow us on Twitter at Stable Report and let us know what you think. As always, if you see we're missing something, please contact us. Today, we have the pleasure of interviewing Gregory Klumov, CEO and founder of Stasis, a centralized stablecoin based in Malta. This June, they introduced a euro-pegged stablecoin, EURS, and outlined their aim of bridging the gap between decentralized finance and off-chain markets. The Maltese Prime Minister, Muscat, was at the launch event, where he spoke about how Malta was taking the lead in establishing itself as the blockchain island with the passing of new legislation on cryptocurrencies and blockchain. Gregory, it's a pleasure to meet you, and I love the name Stasis. It signifies equilibrium in physics, right?
Exactly. Thanks for having me.
That's fascinating. So I love to start with this question. What got you involved in cryptocurrencies, and specifically, why a stablecoin?
Sure. So I was an analyst in a hedge fund and later portfolio management. So I analyzed global macroeconomic trends, and I had to pick stocks and trades in derivative marketplace for a global macro hedge fund. And I witnessed the housing crash back in 2008. And back then, everybody was allocating to commodities because US was running fiscal deficits, the dollar was going down, and there was this housing crisis looming. So oil at some point was trading $150 a barrel, nickel was trading $50,000 a ton. And the only reason people allocated to that asset class was because they wanted to some asset with a forecastable supply curve. Also, back then, the shale technology was not in place yet, and people didn't know that at a particular price level you can dig oil from your ground. Let's say $300 a barrel, you can frack oil in your garden, in your house, and it will be economically viable. But still, it was a trend, and people were diversifying out of the asset that will be increased in supply, say US dollar, to asset they thought they understand the supply curve, say oil or some base metals. Now, Bitcoin appeared only in 2009, and I started paying close attention to it only in 2011, but the idea was very similar. It's the only linear supply curve on the earth that is very forecastable and not amendable or changeable. So my partners launched a Bitcoin fund in 2012, and it was the first world's first Bitcoin fund, actually, even before US guys Pantera Capital, which is famous for launching their fund in 2013, launched one. And we were the ones educating local government here on Malta. And actually, that happened all in Malta. So we educated government officials, fund administrators, auditors, what is a digital asset in its essence, and how to put it on the balance sheet of institutional product like a fund itself. So, and it was a fun journey with this product, and it still exists. It's one of the best funds by Bloomberg, rated by Bloomberg with its performance. And this is how I started. So I realized I should pay attention and should allocate some capital and at least start trading this exciting asset class. And going forward, if there is a new crisis or another situation with traditional fiat currencies where global central bank will decide to print them, inevitably it will reprice this asset versus other currencies. And at some point, global central banks were printing 200 billion US dollar equivalent per month. Bank of Japan, Bank of England, the ECB, Bank of China, and obviously Federal Reserve. All of them combined at the peak of the crisis in 2013, 2012 were printing 200 billion US dollar equivalent. So it's just typical supply-demand economics. Asset with a linear supply that is scarce will reprice relative to asset that will increase in supply.
Does that concern you if or when that day comes that currencies issued by central banks collapse because they're over leveraged? How may that affect stablecoins backed by collateral using fiat currency?
Now, so let's break this question into two. First of all, credit, or let's say leverage, is a demand that will happen in future, and future demand balances the price out. So if there is too much credit, the currency cannot collapse. It's only when there is very short credit, let's say like Turkey now. There are no long-term Turkish bonds, and there is no long-term demand for Turkish lira. That's why it collapsed short-term. But for the dollar, for the euro, there are even perpetual bonds issued, which means there'll be always a demand to buy them back and to pay for these instruments. So until the global economy uses these two big currencies as a way to trade between countries, it's impossible they will collapse completely in price. But what is more important, back to your second part of the question, is the inflation expectation, let's say, or investors' attitude toward particular currency, and this sentiment drives revaluation of, let's say, pound that was once traded $2 versus £1, right? Now it's 1.3. Euro at some point 1.6 to dollar, right? And now it's 1.14. So these trends are driven by a sentiment versus one economy versus the other. So I don't expect those global currencies will collapse any time in foreseeable future, but assets like Bitcoin, like real assets, like gold, like real estate could be repriced relative to these currencies.
We know Stasis is compliant because of your daily statements, as well as weekly and quarterly verifications by one of the big four. Can you explain a bit more about this process and how it affects also your bottom line?
Definitely. So this is the process that brings transparency to stablecoin like ours, and it's a huge differentiator relative to the market, because all other stablecoins have very limited or lack of transparency whatsoever. Since we are mostly facing institutional and accredited investors, we understand how important for them is a measure of cost of risk, cost of a particular risk of a particular counterparty. We don't have a credit default swap trading on Stasis yet. Maybe we'll have in a couple of years, but transparency of our balance sheet gives credibility and comfort for institutional investors to measure their credit risk against us. So we will do 3 streams, like you mentioned. We'll post daily statements signed by our director. We'll do weekly audits of our balances by a global reputable audit firm. And then we'll do quarterly audits, like typical US companies report quarterly earnings and provide audited statements. So we will do in a similar way. All of that will add a lot of comfort to the marketplace and trust in our product.
Absolutely. Where do most of your clients come from? Are they mainly buying in through fiat or converting cryptocurrency?
So far, mostly fiat, just maybe 4% were through crypto. They are mostly institutional investors who want to allocate to either ICO without having volatility of Bitcoin or other, or do arbitrage between exchanges, transferring stable currency between exchanges and to exploit some arbitrage opportunities. And also we are witnessing a new trend. Clients of OTC brokerage are lining up to onboard for Stasis Euro, because OTC brokerage charge a higher commission to enter the marketplace, and OTC clients have the similar methodology of a risk management, a risk measurement of a counterparty. This is exactly the case OTC brokerage exists because institutional investors want to trade in size and against a counterparty they can understand the risk of. So if they can transact through us, it's a price advantage relative to other OTC providers who do just facilitate Bitcoin or other trades at a fee that is significantly higher than ours.
How do current KYC and AML procedures delay your onboarding and affect the whole bottom line as well?
Very good question, but in the current world, it's inevitable to have KYC and ML and source of funds policies in place. And I'm being honest and transparent here that we inherit all the requirements that currently exist for European financial institutions, like brokers, like payment institutions. We require all documents to be less than 3 months old, notarized and apostillized, obviously. And when client doesn't have fresh documents, or with him, he obviously is required to get ones, and that can take up to a couple of weeks to onboard him as a client.
So does this affect your plan to reach developing nations?
No, not at all. I mean, we understood from scratch that this rigorous onboarding process requires some time on the client side. Again, one of our partners is a multinational DMA brokerage company, and they have been onboarding institutional clients since 2011. Like I said, and they're also based on Malta. So we basically just replicated this process and working business as usual. So it just takes time, but once a client is onboarded, we can freely transact. Also, we pioneered what I can call a crypto ISDA. It's agreement in British law that allows to get EURS by depositing any traditional financial security, either a stock or bond or even crypto. So we can accept any security out there and lend EURS against them. It's a typical process that how institutions exchange capital, trading derivatives and other financial products.
To me, it's interesting because Bitcoin, the idea was to bank the unbanked, and so I'm curious how you envision the future of stablecoins. If I'm a teenager in Venezuela and I have some money in cryptocurrencies, and then I want to use a stablecoin, but I cannot comply with KYC and AML. How do you envision the future of stablecoins in general?
So there always be a secondary market, and the secondary market you can purchase stable coins without any KYC and AML. You just purchase them against Bitcoin or other, obviously in smaller quantities. But I think your question more lies in mental part of the world, because for some jurisdictions, let's say dollar is a more natural currency to think in, and for some jurisdictions euro or Hong Kong dollar or maybe Chinese yuan will be more comfortable. It's just a matter of time. The currently market does not recognize one particular stable coin, but I think institutional investors will change that, because they're the ones who will dictate the product terms in the end of the day. And back to my example, what I mentioned previously, dollar was unofficially depegged from gold for 40 years up until officially depegging it on August 15th, 1971. And the whole world was basically adapting to the fact that the dollar is depegged from gold. I think stable coins is a similar asset, similar process that will follow. obviously not 40 years, as the information moves much faster right now, but it will take 5-10 years so the world can adapt to digital assets, that transactions happen on chain. They are immutable, irreversible, and they're very convenient to use. Actually, with our EURS stablecoin, you don't need any Ethereum or gas if you transact from our wallet. You can send EURS to any Ethereum-enabled wallet, paying just 50 euro cents for the transaction, regardless of the size of the transaction. I mean, the amount of the transfer, and it's very convenient to use even for your older relatives. This process takes time. Adoption takes time. We actually have a couple of restaurants in Malta here already accepting EURS. We'll have one in Budapest soon. And other services will follow. I mean, it's just the process that once people start using it, they understand how disruptive the product is, and they don't want to come back to the conventional banking system anymore.
How does Stasis generate revenue?
So Stasis will be generating revenue from commissions first, and second from managing the reserves once we accumulate a significant amount of them. Basically, think about it like a huge money market fund on a blockchain.
Interesting. So you mentioned that you run on Ethereum. Are you considering running in alternative blockchains? And also, can we expect to see Stasis to have a pair for the dollar and for the sterling and other currencies?
We're very involved in the development of our own blockchain. We have a separate team segregated on that. We also have a pilot product on Stellar blockchain. But so far, since our focus is on institutional clients, Ethereum is the most secure blockchain to transfer our token on. And until that changes, we will not be moving significant amount of Stasis to different blockchains. I think with sharding and Casper, Ethereum can scale significantly, but it's not an issue for us currently because we are not in the business of micropayments. An average Stasis transaction will be more than a couple thousand euros. So it's still, blockchain is not convenient to pay like a couple euros for a coffee. It's convenient to move bigger amounts of value, like I said, irreversibly and immutably.
It's interesting you mentioned that today is the anniversary since Nixon closed the gold window for the dollar in America. Another question that we like to ask here in Stable Report is, how has your perception of money changed over time, and where do you, if you could share that?
Sure. Well, money is only something what your neighbor is willing to accept as a means of payment. Like 2,000 years ago, there were some stones, then there were some rare stones, right, or shells, and then governments came up with gold and silver standards, which ended up exactly on this date in 1971. Again, the money by itself is just something you want to have to pay for your goods and services. And an individual doesn't really care what the color it is or what the name of the money is. It just has to be convenient and accepted, right, as a means of payment.
Absolutely.
So I think Bitcoin and other digital assets are too volatile currently to be accepted as a means of payment. And the stable coins are a perfect intermediary to get mass adoption and to get people the feel of a blockchain use and the benefits of blockchain while keeping the conventional logic of traditional currencies like euro, for example.
Very cool. Gregory, is there a question that we did not cover that you would like to tell our listeners and readers?
Well, I suggest everybody to read a book by Nathaniel Popper, Digital Gold. And there is a huge learning curve to climb in digital assets for the whole world. I find it fascinating that even finance professionals, people who worked on the trading floor with me in a hedge fund and banks, they don't get digital assets. Not all of them understand the concept because they lack the tech component, they lack tech education. Don't understand the technology behind. Similar to tech people, they don't have finance education. They just understand the tech, but they cannot put any value to what it could be worth.
Right.
So I suggest everybody should climb their own learning curve, and it's definitely a new marketplace. It's definitely an exciting asset class, and it's just getting noticed by institutional investors. In fact, it's quite interesting that it's the only asset class in the human history that institutionals touch after kind of individuals or public. Just think about it. Before blockchain, you could have invested in a particular asset or a company only after it gone public. And before it was accessible only to big banks or high profile venture funds or private equity funds. It was not accessible to the general marketplace or public before. And now the digital assets were and are available to the public general audience, and institutionals are just starting to eye or starting to value and gauge and get allocations to it. And I find it quite fascinating because it's definitely an investment opportunity, as institutionals are the one who hold liquidity, and they can bring billions into this marketplace, thus increasing the value and liquidity for the benefit of all investors, right? And our product is a perfect fit for institutionals to start their journey with this exciting marketplace.
Absolutely. Absolutely. Very exciting. Thank you very much, Gregory. It's been a pleasure learning about Stasis, and I'm really looking forward to see how the organization develops. If you want to learn more about Stasis, visit their website at stasis.net or follow them on Twitter at stasisnet.